just closed out a Home Depot trade making $565 over the past, I don't know, week or so. Hope you guys are having a great day. Let's get into the recap. Like usual, this is kind of a different trade, I should say, than the past. It's the same idea, the same approach, but a couple things kind of went into this one, I think, that are slightly different than what I've been doing, and not in a bad way, but you'll see what I mean. So on the 25K account, we made 406, and on 44, and then on the 10K account, made 158.32, which is pretty good, because if you know from what I generally look to risk, I try to risk less than $100 on trades on the 10K account. It's kind of like my guide. And so I try to make much more on winners than what I do on losers. There will be some trades, if I take them on bigger time frames, that I might lose 100 or a little over 100 on the 10K account. So risking like a little bit over 1% of my account, because the time frames and the horizon might be like 2, 3, 4, 5 weeks sometimes. I don't know. So I'm willing to kind of nudge that up, because the trades just take longer, as I've said in the past. But I think it's a pretty good number, and we'll get into all the details on the bigger picture in a second. But let's talk about the trade, which you would look at this and you'd say, so like, what's going on here? It was kind of not the strategy that you maybe, or that I'm used to, or that you may be used to seeing in the recaps. And that's because it kind of isn't, but it is based off the same strategy. So the approach, or the idea really behind this, was a false breakdown trade. And I could have got a little bit of a better entry than I did, but I didn't. There's another stock I want to pull up that's very similar, actually, maybe even better, dare I say, better move. That would have also been very, very clean for a false, actually probably cleaner for a false breakdown. It just happened a day or two after Home Depot, so I went with the one that happened first, and it worked out. Either one would have worked in this case. Sometimes that's how it goes, sometimes it's not how it goes, you know? So what I would, in theory, like be looking for on a trade here would be kind of like a move, in this case down, followed by a consolidation, followed by a break of that consolidation, which we kind of had right here, and then a close below that level on the daily time frame, and then a push for, move down. Like that would be the setup, like the breakdown setup. The problem is that in the situation that we've been seeing is that, yes, in theory, that is the idea. That would be what I'm looking for. But can I really fight this trend? I don't want to fight this trend. Now, of course, the trend will eventually, inevitably, at some point, turn around, and I might say the same thing, and we might break down. It may happen, and I'm going to miss maybe some of those early breakdown trades before we establish a cleaner downside trend that I can take advantage of. That's just my strategy. That's what's going to happen, and I'm going to have to live with that, and I'm fine with that, because I'm not trying to catch every shiny object thinking that I can make money all the time. I'm not going to make money all the time, so I'd rather just stick to the strategy, know the data with the strategy, and then just operate that according to how I operate it, and that's it. And then roll with the data that I already know that I can get, which I know is good. So I'm not opposed to it. Obviously, you want to make critiques and get better and improve over time. There'll be changes to make. Yeah, I get it, but I'm okay with where my data is telling me and I'm pointing me right now. So you'd say, okay, well, that's interesting. This setup, I haven't taken very many. If you go back over last year, there's maybe 5 to 10, 15 total that I took over the course of last year. So you'd say, okay, that's interesting. What's going on? Why did you take it this time? Well, like I was saying, bigger picture, you're fighting that. At the same time, I haven't talked much about the Fear and Greed Index, I guess, in these recaps, but it's something that I always have been watching and I've always been looking at. And at the time, seeing fear and greed down very close to extreme fear, historically, when we get down there, we tend to see a bounce in the market. So I go, okay, am I looking at this trade and saying, oh, you absolutely must short this thing this second right now? No, I'm looking to see, okay, I'm watching it. It's on the radar. Looks like a breakdown opportunity. Let's see how it closes up, whatever. And then I see us break down below the level, and then we come right back above it. We push right back above and close the day above. So to me, that goes, I don't know about this. False breakdown kind of running through my head. It took a couple of days, and so I actually entered the trade a day or two after we confirmed. So really what I was waiting for was confirmation of that. So you have the false breakdown. Sometimes you're going to get a bounce right back up, and it's going to be massive, and it's going to be immediate. And sometimes you're going to have this breakdown, and then it's going to kind of just hold for a couple of days like we had in this scenario, and that was my opportunity to get in. So if I go back in time, I can tell you the exact day that we entered this trade. Let's see. So if I go to the executions, we entered on the 13th. So what is the 13th? If I go back in time, the 13th would put us at, so the breakdown occurred, the false breakdown day, we broke a level, then closed above, was the 8th. The 10th, so it was Wednesday, then we had Thursday was off, market was closed. The 10th was Friday, and then the 13th was a Monday. That was this day right here. I believe I entered it at the time, just so happened to be at high of day because we were kind of breaking out of this consolidation zone right here. So I felt, okay, we're getting to the top of that. Let's get in. And then it ends up, pushing down. But then the next couple of days, it bounces back, and it really wasn't a big deal at the end of the day. Anyway, it just worked. I don't know. I'm just using this as my entry signal. And then the entry isn't necessarily that important to me. I guess it does matter in terms of your risk reward, but that was the deal. So that was the entry. That was how we got in. And then we literally just looked for, what was this, a 1.7? Yeah, about a 1.7 risk reward. I did take a piece of it off in the early morning today around 4:17. I can tell you exactly. Let's see. So I took a piece of it off at 4:16.82, and then the rest of it came off at 4:19.16. Targeting around 4:19 was the area. And I want to target that area for a specific reason. So if you look at this chart, you say, why would you target that area? A, it was better than a 1.5 to 1 risk reward. So that's kind of meeting my criteria. Great. B, if we look at this and say, what would this area, signal? If I pull up the volume, let me pull volume back up here and get the volume profile to pop back up. I forgot I didn't have that turned on. So if I pull this up, give it a second to load. Here she is. This is an area that we have some room up to about 425. But I was a little bit concerned with because of the fact that if we were to see this, if this is the beginning stages of a bigger picture reversal, this has the opportunity to potentially be a head and shoulders pattern. So I thought it made sense to where I was targeting, to target up into this area. Technically, this was a concerning area for me right here. So that moved into like the 410 area. So I was watching that one closely. And once we broke above 410, I moved my stop loss to break even. So if we were to hit that area of volume resistance and then come back down and then all the way back down, I wouldn't lose. I would have been break even. So I moved my stop loss to break even at that point. That was end of last week. And then now it's Tuesday. Market was closed Monday. Now it's Tuesday, the 21st. We hit target, so it's irrelevant. We made money. Could I keep going? Yep. Could I miss out on opportunity? Sure. I don't really care. It's not really I'm not really missing out in my head because, like I always say, you have a plan going in, right? And I've recognized that the plans that I've had going in have worked. So why am I going to try to change that? I do see opportunity in very strong trending markets or very strong moves that, yeah, like, sometimes I'll take profits, early. And in hindsight, it'll be early. I won't know at the time. I will not know. We will not know. I look at this and say, yeah, maybe it's early if we go to new all-time highs. Maybe we have a setup here where we have, a head and shoulders develop and this thing kind of rolls over and then I would have had a break even and I would have lost. Maybe. I don't know. So I'm going to take profits where I plan to take profits, where I had originally targeted pretty much right up into this high right here around 420, just shy of 420, and move on to the next one. That's it. So that was the trade. There you go. Now, do I foresee taking a lot of these? I don't know. Because I've had situations where, I've been in breakouts that were obviously false breakouts. I've been in breakdowns that were false breakdowns. And this one fits. It fits a criteria because the only way I would take this, I wouldn't just take, a random false breakdown. I'm only taking it because of the bigger picture trend that's aligning here. So the reason why I don't take a lot of false breakouts is because in the current environment, we don't have a lot of situations where, like we have a consolidation, we break the consolidation and then are in a bigger picture down. The only reason I would take that would be in a bigger picture downtrend, which we don't have that. Like we're in a bigger picture uptrend. The market's going up. That's the situation. So there's not going to be the only trades right now that we're going to get, most of them. Obviously, there are certain stocks and sectors that are weak that you're going to get in terms of the inverse of the strategy would be these. And so that's few and far between, but you see what I'm saying. Another perfect example, I did not trade this, but this is even I would say even a better like textbook example of the situation. Now, they have earnings a little bit closer, like next week. So they were closer to earnings than Home Depot. And at the time, this took I was like a day or two behind Home Depot in terms of what we saw in the breakdown. So I didn't take it. But I did have an alert for the breakdown underneath this level right here. I did not short it at the time, but I could have, because this technically, you could have said, well, yeah, in the bigger picture, yes, we're trending up. That was my reason why I didn't short it. Bigger picture, we're trending up. I also looked at this and said, we're down near extreme fear. It's not the best time to be going short necessarily, based off what I've seen over the past 2 years. Right, when we get down in this area, we tend to bounce. We don't have to bounce. We tend to bounce. That's like, again, probabilities. We have a higher probability of bouncing than not. So based off what I've seen, so why would I put myself in a position where I have a higher probability of losing? Right, so it doesn't make sense. Just doesn't make sense. Even though the setup might look great, higher probability of losing. Why would I do it? Doesn't make sense. Now you back it into this and say, okay, cool. But the next day, it kind of reconfirmed my, potential hunch on this setup. And I go, oh, wow. So now I see breakdown one day, next day, strong bounce, reversal, close back above the level at high of day. You could have made the argument here to swing trade this long at close on, what was that, on Monday the 13th, stop loss under that low, and then take profit. I mean, we got more than a 2-to-1. This actually worked even better. You had a target up into this area of volume, this volume node right here, which would have, of course, now hit today, or, would have hit today. That would have been over a 2-to-1 risk reward. Right now it's up to about a 3, almost a 2.7. So you would have gotten more than a 2. I would have probably targeted a 2, which would have been up around 387, 388. And that would have been, even technically speaking, an even better trade than the Home Depot trade. Now, I didn't know at the time. It also didn't close back above strongly for like a day or two after Home Depot did. So the signal was a little bit later, but same idea. So you see that this is a better example, right? Where you can have these, it looks like, yes, bigger picture, we're trending up. Go back the past couple of months, years, quarters, right? We're trending up. But in the short term, you go, okay, we're trending to the downside, we're consolidating, we're breaking down. Oh my God. Then boom, we snap back. Whoa. And then it wasn't like it sat there for 2 or 3 days like Home Depot, where it kind of just sat around and then eventually went. It just said, nope, slingshot, boom. It slingshots right back up. And these are situations that I've seen happen a lot in this environment, this bull market. And we right back up. So that's what I've been, if I'm going to play the short side, I'm going to need to see more things lining up in terms of a bigger picture trend to the downside. And then I'm also going to want to see like something on the volume profile that says, oh, there's some room. So like if this Caterpillar trade was setting up on the short side, like right here, and we broke that consolidation here, and we had a longer downtrend, I would be interested because of this. But because of where it was, I go, it's setting up for a short breakdown opportunity. Yeah. But I go, look back here. Maybe you can get down to here, but even that is not that great, not that clean in the volume profile, not a big gap. I don't like it. So I didn't really care for it. Fear and greed didn't match up to make sense for me, really showing me that I had a higher probability of losing on this situation than not. And then it would have lost if I shorted it, would have won if I longed it. I didn't do either. I played Home Depot because Home Depot made its move sooner. It broke down, then had the false breakdown signal a day or two sooner. Either way, they both worked, technically speaking. Caterpillar would have been a bigger move, but would I have sized the same way? I don't know. So you can kind of go, well, you can see how this game can go. You can't really get upset about it. You just say, okay, you just note it and move on. Like I note these things. If I note that Caterpillar and Home Depot tend to move together, great. I note those things. If Caterpillar on average moves stronger than Home Depot, then in the future, if I have similar setups, I would probably prefer to play Caterpillar. In this case, Home Depot's setup was better earlier, so played that. That's it. And I again play with the relative strength or weakness if I'm going down, and play with the one that's moving first because I don't want to be second. I'd rather be first, right? If I can be first, I'd be first, if not second. So that's a recap. Now back to this data, which I think is also important to talk about. This is, again, these are longer recaps, but I think they're good to dive into because for me to look back on, A, and then B, for anyone who's listening and seeing like how my brain's thinking. Maybe, you don't, again, like I always say, maybe you listen to my brain and you go, this guy's an idiot, and you want to do something else. Great. If that helps you, that helps you. But so small sample size, not a lot of trades. These are technically 13 trades, but they've all been doubled because of the trade copier. So really it's not that many trades. We're down about $1,000. But as you saw with this trade by itself, it made 565. So you're technically, you're within about a trade away from going break even, and my win rate is not good at all. So if I have one good trade to finish off the month, we could be near break even potentially, with a super shitty win rate, right? So that to me, that's great, because I'm like, my win rate on average over the past 20 months has been like 45%. So if I know that I'm going to be in that ballpark of 45%, big picture, I don't give a shit what happens this month versus next month. It's the big picture that really matters. Now, if this year I have a 35% win rate, then we're going to have a problem, potentially. Maybe not that bad, but we're going to be like, okay, what's going on here? But average win-loss, based off now finally having a winner on the board, is looking pretty good. That's what it's all about. So like, this win rate does not need to be 70% if my average win-loss is consistently around 1.9 is the whole point. This could be 40%, and we're making money. 45 is even better, even great, awesome. So that's the recap. Finally got a winner for the month, but we'll see how the rest of the month goes. I have one open position right now. I will, I guess you can say, be on the hunt for something else, but I'm also not really interested in hunting because we are approaching earnings season for a lot of large caps. So I guess the hunt you would maybe looking for would be potentially over in crypto, maybe in oil, maybe in the metals. Yeah, gold definitely looking interesting. I'm not in it, but yeah, gold, so maybe that's what we're looking at next in terms of our next trade ideas. So we'll see. That's the recap. I'll leave a link to TradeZella like I always do, where I do all the tracking down below. And I'll see you guys in the next one. Code TC10 saves you 10%. Peace.